Hey traders, welcome to Charts and Coffee, the Thanksgiving edition. Yes, on Thanksgiving morning before I start some yoga later on this morning and we start to cook Thanksgiving dinner, I like to take a look at the charts. It's an exciting time of year where we're not only preparing for the end of year and that window dressing rally, much of which has already been underway, but it's not a window dressing rally that we can indiscriminately buy everything. And, if you've been following the content that we've been putting out here at my channel at Raghee Horner or at the Simpler Trading YouTube channel, you know that I've been talking about the long side for a really long time. And I thought today, as always, if you have any questions, feel free. We've been doing a Thanksgiving edition of Charts and Coffee for probably 3 or 4 years now. So what better way to celebrate Thanksgiving than looking at the thing that has given me and my family an amazing life. And, I'm hoping that this content is also helping you navigate the markets through what has been a really great year of trading. So let's get to it. And also, some of the built-in screen reader called VoiceOver. I got a new computer behind me. VoiceOver. Press Command F5 now to turn it on and set up your Mac. That's the Mac talking behind. Oh my gosh, Mac, shut up. Set up your Mac. Press the escape key. That's my Mac talking in the back there. She always has something to say. All right. So if we are taking a look at what's moving and grooving, let's take a look at some really popular names that a lot of folks have been asking me about. And again, if you have a symbol that you want to take a look at, let me know. So let's see what we have here. SMH and XLK. Now, let's think of this under the umbrella of the NASDAQ. Is the NASDAQ the sector to be focusing on as we go into year end? Not really. There are better things to focus on. There are certain stocks within the NASDAQ that are behaving well. And by the way, for today's show, I've got the daily time frame and I've got the weekly time frame here. So I really want us to start thinking about next year. I want us to think about that bigger trend. As traders, we can get very focused, almost too narrowly, on the next hour, on the next 10 minutes, on the next 2 weeks. And sometimes it's good to see what's going to go on for the next maybe 2 months. What's been the trend, and maybe the next quarter or two. Not that we can project out that far. It's not about prediction, but generally a body in motion tends to stay in motion. So what is that motion? What is that direction? How well is it structured? So NASDAQ is not the best place to be right now. This Magnificent Seven label is probably one of the most destructive things that's happened this year. Just this overemphasis, almost just drunkenly, on what 7 stocks are doing has really got traders, supplementing. Instead of supplementing their watch list with these important high concentration weighted stocks, they're replacing their typical watch list with these 7 stocks, as if there's always something to do with Apple and Microsoft and Nvidia, etc. And it just really hasn't been the case. So why is that, right? Why is a NASDAQ basically a laggard? Because of 2 sectors. Think of an index as a motor, and within the motor there are cylinders. The motor is the index, the cylinders are the sectors. And what we're talking about is 2 sectors, 2 cylinders that are just missing, none worse right now than SMH. So when folks ask me, okay, Rag, what about semiconductors? Do we look at semiconductors? And I'll say very, very selectively, if at all, right? Because there's those things that, and these are just mistakes and oversights, right, that we've all made. The only reason I'm talking about them is because I've made them once upon a time too. And, I don't want you to have to be in the markets for 30 years to gain these insights. I think it's really important for those of us that have been at this game successfully for a long period of time to sort of pass it on. Hey, this is where the pitfall was. This is where this tripwire to bad behavior was. This is what I've found works, not for the last 10 months, but for the past 10 years or 20 years or 30 years, because it doesn't affect me at all to tell you all what I'm trading and how I'm trading it, right? It doesn't affect me at all. These are such huge markets. You and me, our size, we are the surfer on the wave. The ocean doesn't give a rip about a surfer surfing the wave. The waves are just going to do what they're going to do. Unless you're trading something illiquid, which is a whole other conversation. So I'm going to move this clock over just a bit. And this is the SMH. Is there anything that looks great here? Not really, right? Not really. TSM continues to make lower lows. Broadcom continues to make lower lows. AMD continues to make lower lows. Why on earth, in a season where strength gets stronger, weakness gets weaker, would I be looking at semiconductors? These are just sort of, frankly, neophyte moves this time of year. And I say that because unless you've been doing this, and maybe some of you pick up patterns really quickly. And if so, enjoy the gift, because it is a gift. So people like me, it took me a little while, thick skull right here. But I noticed over time, this time of year, it's window dressing season, and things that are strong tend to get stronger. Things that are weak tend to get weaker. So take a look at the SMH. It's a dumpster fire right now. It doesn't mean that this is going to be my opinion 1 month from now as we basically go into the new year. For now, I'm going to avoid that sector. And you notice the stocks aren't doing anything to set the world on fire, are they? Right? Now, there are going to be some different exceptions in the XLK. It's very choppy. It's not a leader. Oracle, if you're looking for a setup, Oracle could be very interesting next week. I'd be careful trading on Friday. If you have a slightly longer term time horizon, 2 to 10 days, maybe through December 20 expiration, I'd put Oracle on the watch list. I'd put Cisco on the watch list as well. Would I put Microsoft, Nvidia, or even Apple on the watch list? Apple's not a no, right? Some of the names that we've been talking about a lot the last month have been Salesforce, Oracle, Cisco, right? Not Apple, not Microsoft, not Nvidia, certainly not AMD. And it's not as if these stocks are always going to be no's. Just right now, it's a no. A watch list is a living, breathing thing. Every day, every week, every month, we've got to look to see if the stocks on that list merit our attention and, frankly, our dollars. It's finite, right? We've got to be choosy about what gets our attention and ultimately gets our capital. All right, now let's compare this to XLY. Now, these are all sectors within the NASDAQ. And this is the process by which right now, gang. So this isn't me just talking about analysis and looking back and saying, see, this would have been so great. That's 90% of what's out there. You don't need any of that in your life. My job is to talk my book, which, you know, if you've been watching Charts and Coffee, is exactly what we do. And my book are the trades that I put on in the Sector Secrets Mastery. So what do we have right now? We've got a long position in Amazon. We've already taken profits. We're looking for 2 more targets. And I want to emphasize that when you're getting into a trade, especially within the context of a trend, could be the sector trend, could be the index trend, could be the individual stock trend, preferably all 3. Think about 2 and 3 targets, not 1. Trading should not be this binary point A to point B. That's it, right? It shouldn't be that one-dimensional. We should think about, well, if a trend continues, Physics 101, why not think about having enough time to expiration and enough targets and contracts to be able to take advantage of that trend? Tesla's another one. That's a great looking name in XLY, CMG, right? TJ Maxx. Our watch list in the Sector Secrets Mastery is markedly different than what you're typically going to find folks who are chasing the high of the day, the meme stock, whatever's on television, and all of that is fine, right? But we're not looking for something having a good day or 2. We're looking at things that could have good weeks, right? Multiple weeks of follow through. And that's the way, you know, we want to remember not only focusing on trends, but focusing on things that the sectors that most folks aren't looking at. And I don't mean kind of going treasure hunting, looking for the next big stock. That's not something at scale you can do either, right? Is anyone here going to say, unless you got really lucky, you traded, say, SMCI the first quarter of the year, and then you found MSTR this last 1 or 2 quarters of the year? Most traders are not going to be in that boat. They're going to be chasing the highs. And if those stocks are hot enough, they'll have the luck of being able to get to those higher highs. But what about the rest of the year? Right now we have 8 open swings, right? All of them are in profitable positions. 7 of 8 are at break-even stops or better. That's what I'm talking about. So if you're looking at November going, I don't have that many open swings right now, right? I haven't been looking at the trends. And right now I don't have 7 of 8 open winners. And that's not all the winners for this month. That's just the ones we have open right now. So the reason we're able to do that is not because of anything magical. It's just finding the trend. Alcoa is another one, right? Who's talking about metals and mining? We are, right? We are in the Sector Secrets Mastery. If we have strength in XME, see that chart on the left moving higher, right? Something that XLK and SMH are not doing. I'm going to look for those liquid options chains in the strength names of this group. And you can see right there, Alcoa is definitely one of them, right? So we want to avoid SMH, right? We talked about that already. Okay, so we got a couple questions coming up here. And let's go back to this chart and go back to, say, for example, Amazon or Alcoa. You know, one of the things I talked about on Friday was the difference between, say, looking at Alcoa. See the consistency? We bought this back in this dip. It's a mean reversion. And look at how many days, 1, 2, 3, 4, 5. That's the trend that we've been taking advantage of. Do I mind, and this is a really important point to trend traders, do I mind Friday's candle? Not even a little bit. I'm long from here, right? I'm long from down in here. That little pullback, or even this little pullback, that shakes out momentum traders who bought at a new high and have a low tolerance for a pullback, which is fine because, you know, look, if they bought momentum on the 19th, that's a pretty good follow through. But if you bought momentum on the 21st, or if you bought momentum on the 26th, those aren't great candles that followed. So if you buy the dip, this kind of candle on Friday, I could care less, right? The overall trend is up. And if I have enough time to expiration, what do I care about one session? If you're living and dying with one session, let's take a step back and say, why should one session be the undoing of my trade? Because it's certainly not the undoing of the trend, right? Okay, so Munir asks, what about tariffs killing the bull run? Seriously, Munir, you know, there are going to be times, I mean this absolutely sincerely. And like, so what do we do about that? Right. And I know you're not probably asking, you're probably echoing, you know, what we were being bombarded with. Yeah. Certain stocks like GM, certain stocks like Walmart, this tariff merry-go-round of lunacy is going to continue to come around. Costco got hit with it. Walmart got hit with it shortly after the election. GM got hit with it randomly, I think on what, Wednesday or Thursday this week. So we're going to follow the trends. We're going to take advantage of the dips. The dips happen to come by these, frankly, very orchestrated scare tactics by financial media. Look, financial media doesn't want you to manage your money. They say that. They don't. What they want you to do is pay attention to their ads and maybe do business with their advertisers. That's how they make money, right? That's how they make money. That's the service. So at the end of the day, I have to ask myself, well, why are those headlines coming around? Because fear sells. It's clickbait. It's eyeball bait. And if traders feel uncertain enough, if investors feel uncertain enough that they can't do this game, then they're going to give their money to somebody else, who, by the way, lo and behold, are the advertisers on television. You know, it reminds me of, for those of you that might know the scoring, I know it's a very well-known story, but why tennis scores the way it does. It's an odd scoring system, isn't it? It's easy enough to learn, but if you're just an outside observer watching it for the first time, it's not like baseball, right? Even football is quirky, but it's not a simple process of how somebody makes a point. And the reason was it was meant to leave people out. The more confusing something is, it's meant to leave a certain segment of the population out. We don't want them to understand for a very good reason. It's a self-serving reason for Wall Street. So, you know, when folks start talking about tariffs and whatnot, rather than telling me, and I could say this about many traders too, don't tell me what to be scared of. Tell me what to do, right? Don't tell me what could happen. Tell me what you're doing now. And that's what we do so different in the show. Hopefully that's what resonates. I'm not going to be here to ever say, this thing could happen. We're potentially at the top. The only answer is that person saying, I've got long puts or I'm short, which they never say, do they? Because they just want you to watch. They're not actually trading most of the nonsense that they're talking about, are they? So keep that in mind. We're long Walmart. We're long Walmart. We're looking for opportunities to get long. We want to continue to get long. Why? Because it's in an uptrend. So yes, much like GM got hit, there's not much we're going to be able to do about that tariff stuff, but that's just something we're going to have to deal with randomly. Because what's the flip side of that? Short an uptrend? Because maybe this news might weaken, right? Those are things that, again, Wall Street's going to program you. Wall Street's going to poison your mind with. We don't want to even entertain that. I'll give you a really good example. We were talking about, I think, GM in the room, and one of my members, and well-meaningly said, hey, they've lost their way. What does that even mean, right? That's the mindset we want to keep away. It doesn't even make sense. It's an uptrend. Do I want to buy the dip or not? That is the mindset we have as traders. So be careful with starting to adopt an economist mindset. Be careful when you're trading, adopting, well, in 1 year, do most of us have trades that are going on for a year? I know I give it to you straight on Thanksgiving. Hopefully I give it to you straight every single day. Do I care about what's going to happen 2 or 3 quarters from now for my trades, which usually are only going to go to the next Friday's expiration, that next OpEx, right? So be careful, because traders will cite things in their logic on a trade that might be open for 2 or 3 days, right? And that's why trading is difficult, not because the trading process is hard, but because most traders don't know their time frame, their time horizon, and the validity for their trade. After that, everything is extraneous, right? So, those are things that we want to make sure. And I appreciate everyone's time and questions, but, someone's got to just say, look, it doesn't matter. And I think that's really important to be able to do that. Say, look, it doesn't matter. And I don't mean the question doesn't matter. I mean, answering that question, asking and answering that question. Is there a trade idea? Is there risk management? Is there something useful after that is pondered and then answered? And my opinion is a lot of the things that are discussed in the trading and investing world don't actually add to any kind of tactical approach. All right, so the question here is, what's the website I use to track the sectors? Brian, it's called Koyfin, Koyfin. I use a free version of it. I love this service. Don't know the folks. This is not an affiliate thing. They are having a Black Friday, as, by the way, is TradingView. TradingView is also having a Black Friday. Again, I don't know these folks. I've been using this for over a decade. They're having a Black Friday sale. If there are things that you've been wanting to scoop up and try this time of year, it's a perfect week to do it. If you've been wanting to try out TradingView, if you want to try out the premium version of Koyfin, great. If not, there's free versions of both these tools. If there are indicators or classes that you've been wanting to check out at Simpler Trading, right? This is our Black Friday sale. I will tell you all, and I want to give everyone a heads up, because if you've been thinking about, okay, Rog, I've been listening to you here in Charts and Coffee for a really long time. I see that, you've got some winning trades. I still don't get it. Obviously there's only so much I can share pre-market for 20 minutes in the morning, but hopefully even some of these things are helping. Q1 of next year, and I don't have all the details yet, but Q1 of next year, just so everyone's ready, we're going to kick the year off in a way that we've never done before. And it's going to be me basically for 3 months, kind of mentoring, basically the first 3 months here, what I'm doing. I mean, basically, what are the indicators saying? What are the trade styles we're using in the mastery? And it's really, when I started, I did CrossFit years ago. And one of the things I really appreciate about CrossFit is they made you go through this on-ramping. And in that, you learned how to do the moves properly. You learned how to not hurt yourself. You understood, you got a nice, slow introduction to something fairly intense. Well, trading can kind of be like CrossFit. It's exhausting. Sometimes you want to throw up. But if you do it right, you'll get in really good shape. Right? So there's that. But the on-ramp to trading is really steep. And sometimes it has pitfalls and you can drive right off the ramp. And so next year, Q1, we're going to do this thing where not only are you going to still obviously be part of the Sector Secrets Mastery, but we're going to give you that on-ramp. I loved how I was able to then join a CrossFit class. And I didn't feel like I was lost or behind or not able to keep up because I had this great on ramp. And maybe that was the box at the time that I went 2 years back, but I really liked it. I can't say that I loved the workouts. I mean, who loves a CrossFit workout? But it was very effective. And I learned a lot from that on ramp. And then we're going to do something similar Q1. So if you've been wanting to do something, I know between now and Christmas, things are topsy-turvy. It's not always a great time to start something new. But at the beginning of next year, if you've been thinking about it, it's going to be a really great, and we've never done it like this before. So I'll definitely tell you more about it, but this is something I talked about with my partner here in the office, to Trish Boss, and she's got some very cool ideas planned for getting people into the process of trading without all the trials and tribulations. But it will take a little time. It's going to be an on-ramp. And so that immersion really for a quarter is what we're working on. So I'll let you know more about that when we sort it out. Okay. Let's see. Is that it on the questions here? I think so. We covered all those symbols. All right. So, by the way, if, Pierre says I played, okay, hang on. Let me jump on over there. Pierre says I played a 1, 2, 3. Very cool. A 1, 2, 3, for those of you that may not know, is a very old pattern. It's a price pattern. And you did it on target. Okay, cool. Very cool. Played 1, 2, 3, and it's been a winner. I love it. I love it. Oh, you can see the dog in the background. Hey, pup. Hey, pup. You can see her? Let me see. Let me see that little face. Come here. Come here. Hi, pup. Yeah, she's our, you can't quite see her. There she is. Her name is Kara. Yeah, my husband named her after one of our favorite characters in a Star Wars movie. Although she's my favorite character from the Battlestar Galactica reboot. So there you go. Yeah. Kara. Yeah. All right. She's our rescue. She was actually one of 9 puppies. She was her mom was out in there's a lot of farms down in Homestead Homestead, Florida. So I don't live down there, but there's a lot of farms down there. And my husband worked for a rescue, and they brought her in, and he fell in love. And that's it. Her name's Kara. All right, gang. Have a great one. Happy Thanksgiving. Thanks for tuning in. Hopefully just the discussion about what we're looking at and why is going to point you all in the right direction. We've been talking about these sectors for weeks. I'm not going to stop talking about them until next year. That means focus on regional banks, focus on airlines, financials. Be careful with energy. It's still a tricky one, but XLE, Chevron would be my preference. Again, our watch list is going to be very different. So just know that what we're trading in the Sector Secrets Mastery is going to be markedly different than what's typically being discussed or traded for that matter. Unless, of course, they're watching this show. Insurance is another one. That's where that LNC trade has been on our book. Communications have been interesting, but not Meta, not Google, rather Netflix and Disney and the telecommunications. So go through this list, maybe pause this if you're watching this on replay, look at the stocks within them, find the stocks that are in uptrends. And that's really the rinse and repeat. That's why, as I mentioned before, we have a saying in our room, every entry, every exit, every day. And, I mean that sincerely. You got to know every single entry, a lot of, if you're adding to a position, right? And you buy in, I don't know, something moving lower like Nvidia at $3, at $2, at 70 cents, right? And that thing bounces to $1. Have you made any money? Think about that, gang. If you scale in and the first little bounce, have you really made any money? And those are the challenges that traders have when they're scaling in or adding, which I don't recommend at all. Not only are you potentially building a position too large in terms of potential risk to the account, it's really just denial, as is rolling over, gang. I know these are things that are popular. I know these are things that maybe you're doing now, but question the logic behind them. Would it just be easier to let something like Nvidia go and find something that's moving up, like financials, like Wells Fargo, right? Like Walmart. That's where your focus is, where your money goes. If your money's going to something that's not going to find support because it's not going to benefit from window dressing, that's hurting you. It's not only a potential loss, it's an opportunity cost. So think about those things. So again, if you scale into something and it bounces a little bit, that little bounce actually represent a gain in your account, right? Those are things that you got to keep in mind. Arya, how can I schedule a call to discuss what membership would work for me? Arya, we have folks they're not there today, obviously, but we have folks back at the mothership in Austin, Simpler Trading. So if you go to simplertrading.com, if you go to simplertrading.com, we have customer service folks that'll walk you through what I might offer that could work for you. Maybe it's a class, maybe it's the membership, maybe hang out and wait for that Q1 immersion that we're going to be doing. But you can talk to folks at the office and they'll give you a good idea of what we have. And then right now, of course, gang, we have the Black Friday sale, simplertrading.com. I don't know the code offhand, but I'm sure it's on the website. So if there is something you've been wanting to pick it up on sale. I always tell my members when stuff's on sale and you've been wanting to pick it up, yeah, for sure. Okay, gang. In the meantime, this is what we've got going into Friday. Going into next week, these are all the entries. These are all the exits. Remember, I'm usually focusing on up to 3 scale outs. So all of these T1, target 1, first target scale outs, have a target 2, right? Have potentially a target 3, which is sometimes just time or the expiration itself. But notice all of these have been scaled out except for XLE, which is moving in our direction, but not quite at that first target yet. And then sometimes we even have these optional scale outs where traders are thinking, Ragh, I've got a really nice unrealized profit. I'd like to be able to start to ratchet up the risk management. I'd like to start to pay myself. I'd like to continue to grow the account. So we do put those optional scale outs there as well. So this is what we've got. Take a look at the list. Think about what sectors are from. You'll see it's coming from exactly the conversations that we have here in Charts and Coffee. All right, gang, be good to each other. I'll see you on Friday.